Hi guys, it's Ian and this is your weekly market wrap-up video. It is Friday the 13th of June 2025, just coming up to 9:30 in the morning in the UK. Escalating tension between Iran, Israel and the United States. Overnight we've seen high volatility in the markets. We've seen oil flash to the upside. We've seen the US 30, which is the Dow Jones, move lower. We're going to cover those products. We're also going to cover DXY, which is the dollar index. We'll have a look at gold and we'll go through the major currency pairs to highlight what I believe is happening in the markets at the moment. I think it's quite important to say at this point that sometimes it's quite bad to jump on trends. We'll notice that this morning in US oil. I think the mantra, the trend is your friend, can be true, but only the correct trend, and you have to look at extension levels, fib extension levels in particular, just to highlight where you are in the current cycle. And I think a few novice traders might have got caught offside this morning in US oil. But let's get to the charts. So what I want to talk about first is obviously the setup here. This is a trading view screen. So bottom, middle is a monthly chart, weekly chart, daily chart, 8 hour, 2 hour, and then an hourly chart. I personally am a swing trader, so even though I can get in and out of trades within a day, it's more likely that I'm going to be looking to sort of 2 to 3 days, or even if I'm getting a signal off a monthly chart, they can last quite a bit longer. Let's talk about US oil. So basically this is the daily chart. Okay, we've seen an impulsive move to the upside. This is actually a weekly resistance barrier at $74.28, and what's happened is we've hit that barrier. Obviously traders that were long oil have taken profit, and then we're starting to see this consolidation to the downside. This dashed black line is my bespoke support and resistance levels. So once obviously price action holding below is resistance, as soon as it breaks above it then becomes support. And what happens is that basically the levels catch up with the market. So at the moment the daily support is located between $64.83 and $64.01. Okay, and we can see that's quite a long way away from the current price action. So what normally will happen is we'll see a period of consolidation, and these support levels will move to the upside. Now what is important is the large candle formation. So, and I'm talking about where they open and close, not sort of spikes in both directions. So sort of yesterday's price action, okay, we got dip buying, but we opened and closed at relatively the same area, and that candle to me is not null and void, because obviously it still shows price action, but really you want to be concentrating on these large candles, okay, looking at the open and the close and potentially using them as entry and target levels. So what I believe is going to happen for US crude oil is that we will consolidate. Okay, this is obviously the Friday candle. It's a big wide ranging candle. We'll probably close up towards the high of the candle, up around previous swing high, which is at $72.04. But then Monday and Tuesday, maybe even going into Wednesday next week, I think we'll just consolidate. Okay, so these candles, when they hold inside of this big range, they're called inside Arami candles, or inside days, inside soldiers. What they highlight is indecision. Okay, that is a period of consolidation. When we've seen an impulsive move to the upside, it happens a lot. We get these periods of consolidation, so we just move inside the bar, and that is basically smart money accumulating longs. As far as the sort of Wyckoff theory would be concerned, it would be an accumulation or a distribution zone, and then we break to the upside. 261.8% is located at 80.96. Okay, that is a common exhaustion level for an Elliott wave count. So wave 1, wave 2, wave 3, consolidate in 4, and then up in 5. So at the moment, as far as I'm concerned, it's a very good point to stand aside in oil and to look at a prime long opportunity going into next week. So if we consolidate for sort of 3 or 4 days, then I'll be looking around this sort of level, $67.68, which was close to this morning's or the overnight open in oil, and then I'd look to that level as a potential long to take me up to the fifth wave completion of this Elliott wave count. So at the moment, just take care in oil. Yes, the bias is bullish, but consolidation and then the potential to get in. Now, US 30 flagged this one this morning, and again, it's all about time frame. A lot of analysts look at Elliott wave theory. They might look at the Wyckoff theory. They might look at the Gann theory. There's lots of different theories out there. I believe that the best theories are the ones that use not just pattern analysis, but also use timescale analysis. Okay, so things become exhausted. We have impulsive moves. They come exhausted at certain levels. Now, it's not just certain levels, but it's also certain time scales. At the moment, I've got weekly support here at 41,730. I've also got a support level at 41,868. Okay, so if we see, and again, I'm not a fortune teller. I'm not trying to enable or sort of pressure the market. I can't do anything about what's going to happen, but what I can do is react to what does happen. So if, and it's always an if when we're trading, if we get down to this level, which is 41,730, and it would have to be today because the timescale analysis exhausts at the end of today, and that's quite important. If it gets down to this level, then I would expect a correction to the upside. So we'd have wave 1, wave 2, wave 3, wave 4, wave 5. So this is again a classic do I follow the trend? Well, at the moment this looks like a fourth wave correction. So if you wanted to follow the trend, you could place a short trade here, stop loss above here. But my system says that yes, all right, this might be a fifth wave down towards this support level. My system tells me that I'm not to trade this wave pattern. I'm actually to buy into this wave pattern because it's my system, and that's the system that I have to stick to. So 41730 would be my trigger level today, and then a target going into next week would be 42,437. So the immediate bias looks bearish, but I'd look to buy dips, but only on an intraday basis. So that stock indices, as far as I'm concerned, as US 30 should mirror the other US stock indices today. We've covered oil. Let's have a look at the majors, and then I'll go through some other setups that I've seen this week. One that we talked about in the Wednesday video, which played out quite well. Let's go to the dollar products first. Okay, so DXY, we've seen a very decent move to the downside, but what has happened, and this is the 1 hour chart, okay, wave 1, wave 2, 3, 4, and then down in 5, and we're seeing this move to the upside. Market moves are never in one direction. We get higher highs, higher lows, and lower highs, etc. and we need to try and work out when these changes in sentiment happen. Okay, so you don't really want to be selling down here. You want to be considering buying opportunities, but also this correction to the upside is going to be choppy and it's going to be in three waves. So what I believe is happening is that we've seen 5 waves to the downside, 1, 2, 3, 4, 5. We're now seeing this 1, 2, 3. So the opportunity this morning, and it is literally on an intraday basis, was actually to sell into dollars, and that's why my report this morning for sterling dollar was actually bullish, and I had quite a decent support level. So at the moment we're seeing a move to the downside in the DXY, which is the dollar index. That's giving an opportunity to buy products like sterling dollar, US dollar. But let's talk about the rest of these products. And what I should say, just on the right hand side here, if it is an amber light, as I like to call it, then it's on the watch list. Okay, if it is a blue light, then I've bought that product. If it's a red light, then I've sold that product. If it's a green light, then it's a trade plan that has been executed and moved to the target. So if you look at sort of the big sort of picture, and I look at quite a lot of products, then you can see which ones I've sort of got amber lights on. If it's a light blue light, then it's getting close to a support level. If it's a green light, then it's obviously hit target. Let's go back to the dollar products. Let's go to sterling dollar first. Okay. So again, big picture analysis, sort of traded to a multi-month high overnight. So we had this wedge formation. We broke out of the wedge formation to the upside. The actual Elliott wave pattern got broken. I thought this would be 1, 2, 3, 4. That actually moved below wave 1, so that sort of negated that price, or that theory, if you like. And then levels above the measured move target, which was at 1.3517, got sold into. Now what I like to see, and again using timescale analysis and using Elliott wave theory, etc., is confluence zones. So this morning I had a confluence zone between 1.3528 and 1.3516. That to me is quite tight. Okay, the minimum target for the move to the upside was 1.3551. So I said in this morning's report, written report, you know, you've got to be careful taking counter trend trades, because this is wave 2, or what I believe to be wave 2. So when it gets to 135.51, you have to either sort of lock in mild profit, or you move your stop loss to entry. Okay, because it's hit the minimum requirement for that wave pattern. What I did note in the report was 136.16 is prime resistance, so if you sort of wanted to bleed it higher, then there was obviously that possibility. Now, big picture analysis, the black lines are daily support and resistance levels. The orange lines are weekly support and resistance levels, and the blue lines are monthly support and resistance levels, just to highlight what you're seeing on the charts. So what I believe is going to happen, and again, what will probably happen, especially after a small upturn today, if we close high this week, is that this level, the dash line, will probably move up to this dotted line, and then you have a decent confluence zone. So what I believe is happening in sterling against the US dollar is that we're moving, completed one, we're going up into next week, and we've got a lot of sort of days, if you like, to form this downward trend, and then we get towards this level, which is going to be around about 135.62, and that would offer a buying opportunity for me. I've bought it here to here. I'm going to buy it here and look to bleed it to the upside. I'm not going to be trading this trend lower, okay, because that is not my system. New Zealand dollar, and this is very sort of short term. This looks like a large sort of Wyckoff accumulation zone. Managed to sort of pick a bottom this morning. I didn't get it in down here, but I got in at 60.16. So again, it's just a short-term setup. Got these confluence zones. So 60.16, 60.10 was the support level, targeting 60.48. I've only got 2R on there, so that's basically means that every £100 I'm risking, I've got the potential to make 200. I normally look for R rates that are in the regions of sort of 3 plus, but it was quite a decent setup, so I took that this morning. Let's talk about euro dollar, sort of big picture analysis. Again, this is sort of going into next week. So we talked about Elliott wave, we talked about fifth wave extensions. We've talked about 5 waves, basically, not fifth wave extensions. What Elliott wave is a theory that is good for extension levels, but it's also very, very subjective. Okay, so the corrective formations, and that's why I like cipher patterns, can be a bat formation, can be an inside Gartley, etc., etc. 61.8%, 78.6%, 34.1%. It goes on and on. But it is quite a good theory to try and work out whether or not you're trading with the main trend or against it. So I think basically what's happened here is that we've got wave 1, wave 2, wave 3, wave 4. I believe this was wave 5. We've come lower, doji style candle, and then we've pushed up. Elliott wave theorists will probably say that this is a fifth wave extension. Fine. I don't have any signals at current levels in euro dollar, but what I do have is next week I will have a support level at 1.1176. If this corrects lower, I'll be looking to take a long there, and then I think what will probably happen, and we'll have to work out where the sort of target level is closer to the time, is something like this. So you get these sort of disjointed head and shoulders patterns. So what normally happens after a fifth wave completion, as far as Elliott wave is concerned, you will either get a head and shoulders formation or you will get an ending wedge pattern. So wave 1, wave 2, wave 3, wave 4 here, wave 5 extension, which is causing the head then to move lower. This will give me a long opportunity to take the move back up towards these sort of levels. So that's sterling dollar, euro dollar covered. Dollar Swiss, again I've sort of put this on here. Some pretty mixed volatile price action, but we are continuing to make lower lows and lower highs. So going back to the very basics of trend analysis, we've pushed to the downside. We haven't taken out the previous swing low. 1, 2, 3, 1, 2, 3. Sort of looks corrective. Going to be a hammer bottom or potential hammer bottom today. If we get this level, which is located at 0.8203, if we get towards that level on Tuesday or Wednesday next week, then again that will probably offer a selling opportunity. I wouldn't expect new lows, but I would expect a move down to these sort of pin bars at the bottom of here. So that swing low was located at 0.81, and then we've got these sort of the close and the open from the 21st of April, 22nd of April, close to here. So again, sort of a little zone there that I would expect this to move down to, but for limited selling pressure. So are we counter trending? Are we trending? And I believe, obviously, if that moves up to here, then we've got a not today, but on Monday, then that would actually post a morning doji star pattern, and highlight that the medium-term bias is to the upside. So we've got to understand whether or not we're trading counter trend, which that would be. So you wouldn't expect to see new swing lows. If it's a trend, then obviously you can try and sort of bleed the trades for bigger signals. Dollar CAD, again sort of highlighted here. Right, let's talk about correlation. So correlation is really important. We sort of talk about correlation with the dollar index and other correlated products, which are obviously all of these above. Obviously if the dollar index is going down, then euro dollar, sterling dollar has a tendency to move to the upside, so the -1 correlated. Oil is obviously correlated with the Canadian dollar. What has the potential to happen now, because we've talked about US oil, is that we get a period of consolidation. Okay, so even if we see a move to the upside in the US dollar against the Canadian dollar, that's strengthening dollar, weakening oil. Okay, so what do we expect to happen in oil? Well, we expect oil to weaken or to consolidate. Okay, so there's ample scope for a move higher here, but then we expect oil to move higher. If oil moves higher, Canadian dollar should strengthen. What should happen here? This should then move to the downside. So the US dollar against the Canadian dollar should move to the downside. If we get a move towards sort of 136.95, 137.08 on Monday, that to me would be an upside barrier and a selling opportunity. As we move lower within this very large sort of ending wedge pattern, but it will be with the trend. Okay, so we've got wave 1, wave 2, wave 3, consolidation, move to the upside in 4, and then a move down in 5. At the moment I've got support located at 1.3444, easy for me to say. So it would offer quite a decent sort of risk reward setup as well, this one. So again, sort of where's your entry, where's your stop, where's your target, work out your R rate, trade, plan the trade, trade the plan. It's going to probably offer in the region of maybe 6R, I believe, for a potential move to the downside there. So one product that we've not covered is dollar yen. Why have I not covered dollar yen? Because to be honest with you, it doesn't line up with anything that I really have at the moment. I've got some sort of weekly resistance located at 146.21 and 145.89. I can't see a cipher pattern. I can't see any other sort of signals that are sort of lining up. You can see here that even the daily chart, my barriers are quite wide. So 144.06, 144.85, I'd never trade an 80 pip spread because I basically have to fade into sort of a selling opportunity here. So at the moment, it doesn't really do anything for me, dollar yen. I've got 50 odd products that I look at, so just concentrate on the ones that have better trading opportunities and let the other ones play out until the trading opportunities become more obvious. So let's go to sort of the big list, if you like. Aussie, New Zealand, quite like this, put Friday on there, so if it happens today. What's happened is we've got this pattern forming, so let's just show this as well. So ending wedge patterns, expanding wedge patterns. So this looks to me like a large expanding wedge pattern that has a bias to eventually break to the downside. Okay, the measured move target is the start of the wedge. So if we just move this out of the way, that's at 107.27. So that gives me a minimum target level. I've got a nice confluence zone between 1.0788 and 1.0791. 1.0791 is prime. Again, planning the trade and then trading the plan. Why is this attractive to me? Because I have a solid resistance level. I have a solid target level, which is the completion of the crab formation. 106.80 is the target, but could quite easily get to 106.75. Where does the pattern break? Well, the pattern breaks on a move across the previous swing high. Again, just to see where that is, that's at 108.05. So you can then plan your trade. Okay, so this trade opportunity is really coming in around about sort of 5.7R, and they're the ones that I really like. What I should say is that if I do trigger short around this sort of zone, 107.88, 107.91, then if we get a move down to this level, which is only at 107.63, I'll then look to move stop loss to entry. So it's quite important as well that you don't that you manage your trades. Okay, that you don't just say, well, I've got a short here, I'm gonna let it sort of flow. You need to minimize your risk as soon as possible. So if it gets down towards this level, then I'll be moving that stop loss to entry. I particularly like that on a Friday because then it limits any sort of weekend anxiety or weekend stress that you might have. You can sort of move stop loss. Okay, you might get a gap open. Also, spreads widen, but it shouldn't widen 25 points on a sort of Friday close or a Monday open. So Sterling Aussie, this was what we talked about. And again, just look where the confluence zone was. It was between 206.73 and 206.54. So had a sort of long opportunity here. We've driven higher. My target level was the wedge, 2.0885. I didn't look for an extension. I was quite happy with that target. What has happened is that we've seen a continued move to the upside. We could have probably bled that for maybe another 1 or 2 R. One product that looks quite interesting is platinum today. It's only today. Really overstretched. It's we've had such an aggressive move to the upside. Wave 1, 2, 3, 4. So we're still in wave 5. If, and it is a big if, and it's a big sell-off from current levels. I've got daily support located at 1,164. If it gets down there today, I believe it offers a buying opportunity. I wouldn't outstay my welcome because I don't think it will extend to here. That would then be sort of a swing high. So you'd look to sort of previous highs, previous lows and closes as the levels to get out of long opportunities. Let's have a look. Have we got anything else that's sort of screaming out to me today? No. So just to highlight what we've talked about within today's video, US oil expecting a period of consolidation. DXY has hit a 261.8% extension level. We're getting that choppy price action. It looks like it's going to form a medium-term base. So sort of sterling dollar longs, New Zealand dollar longs that I've taken today, they're only counter trend opportunities and not going to outstay my welcome. Really looking at those confluence zones next week for sterling dollar, euro dollar. If they get down towards there, then they're going to again offer counter trend buying opportunities, but quite decent ones as well. I mean, we're going to be talking about sort of 70-80 pips for euro dollar and probably 100 pips for sterling dollar. US 30, if we get a sell off this afternoon, then that would offer Friday only buying opportunity. Okay, I hope that has been educational, beneficial. Good luck in your trading over the next week. I'll be back again on Wednesday with a system setup video, Have a relaxing weekend, and I'll speak to you again soon. Many thanks.
Hola Prime, trade with transparency.